Day 2 of the annual Bankers Conference, and the highlight of the day, the Central Bank Supervisory Arm shines a spotlight on cloud financial services companies.
But should a risk materialize, is the service level agreement adequate to protect you or to protect the customers whose data you're holding?
Eye on the risk of critical system failures.
And the other emerging risk, especially with cloud computing, is that we know that open banking is around the corner. The concept that the customer owns the information and the customer's historical data, which was a competitive advantage for the service provider, now has to be permissioned. Permissioned in the sense that for anyone, the customer, he or she, can make that information available to any other service provider, even irrespective of the fact that the financial institution that holds their data was using that as a competitive advantage. And the other person doesn't have to pay a single shilling or dollar for it. What does that mean for your business model? That even we as regulators need to first refocus ourselves and decide that we are going to stay away from cloud computing as a technology and focus on the service that cloud computing basically provides, which, by the way, is not actually storage. What cloud computing does, or what a cloud service provider provides to you, is security. We are adjusting our regulatory and supervisory focus on two just services and from a risk-based perspective.
But on the other end of the virtual conference, the bank's head urging financial institutions that the digital transformation journey must work towards reducing the existing divides across users, majority of whom are still struggling to adapt to the technological and behavioral trends brought about by the disruption and now the pandemic.
The digital transformation may polarize the market by excluding those segments with low levels of digital and financial literacy. Non-equitable access, technology-enabled user devices may also increase the already significant digital divide. In addition, access to efficient, reliable, and secure infrastructure may itself be a constraint to seamless consumption of financial services.
Away from the servers, the role of banks in aiding socio-economic recovery in a country where the pandemic has left serious damage on livelihoods.
And when you look at the one possible answer, in fact, it's the surest answer in my mind, outside of oil and gas, which you're very well aware of, but the one area that can take and create employment across the spectrum of skills, from the non-skilled to the very skilled, is agriculture. So all of us as Ugandans have a duty to unlock this sector and to lend ourselves to solving for it. And in time, because God has rewarded us already. We have the climate, we have
the COVID-19 pandemic, the most serious challenge to financial institutions today. But as the economic fallout widens, retail banks find themselves having to deal with priorities that require concrete steps to reposition with the future in focus.